First of all, I would like to say that we are very happy and proud to support Panathēnea. The vibe is excellent, so congrats to all the team, okay? And if Madeline is here still, of course we know Steven Seagal, okay? And I would like to say that in Greece we have excellent corporate and startup in cybersecurity, just for a note, with a global impact already. So, Victoria, Christian, and Danai, welcome. How are you? How do you feel today?
Great.
Great.
Happy to be here.
Okay, let's start with a quick pitch for your companies, and we will start to discuss about the future of finance, because I'm already feeling like a dinosaur, okay? Every day, every day. I feel I should learn more and more things. So, Victoria, let's start with you.
Awesome. First of all, thank you so much for having me here. Finny is a growth platform specifically.
Okay, the panel setup. Thank you.
Specifically designed to help financial advisors grow, so source new clients as well as manage new clients. We do that by, first of all, aggregating all publicly available data in the US. Anything that's online about a person, we know their net worth, we know where they live, we know if they recently got married, divorced, all sorts of things. We then prioritize the leads for advisors in a way that is personalized to them. And then the last piece is that we automate the outbound in a personalized way. And if someone's a client, we help you make sure that you're showing up for them at the right time with the right message.
Great, thank you, Victoria. So, Christian, your company?
Yeah, so I'm the founder of a company called Clove. We're trying to build the financial institution of the future. And we think that starts with financial advice. So we are combining real human advisors and AI to provide regulated advice to people. So everything from kind of investment advice to how do you get a mortgage or insurance or any of these things. And really we want to become the home of how people think about making long-term financial decisions in one place.
Nice, great. And Danai?
Hi folks, I'm Danai. I'm the co-founder and chief scientist of Gradient Labs. We're building the operating system for the back office of financial institutions. What does that actually mean? We've all built and grown new banks through our careers, and what we've seen is this huge operational load in the back office, like in terms of fraud, financial crime, lending, collections, underwriting, and all of that is ripe for maturing in the age of AI, and that's what we're building the operating system for.
Great, so you mentioned AI, platforms, data, so let's set the scenery and say, what is changing in finance right now, and which is the role of AI and technology? Let's start with this. Victoria, would you like to start?
Yes. From where we sit, and again, Finny doesn't directly manage people's wealth. We empower the advisors to do a better job at that. And what we really observed was that one of the main barriers to trust was actually neglect. It was that advisors, typically manage around 100, 120 households. They cannot physically retain all information about every single one of their accounts. They can't show up for them at the time that matters the most. So what we were really excited to do is really build AI to bridge that gap and to empower the advisors to show up for their clients at the right time. And in that way, our thesis is that AI can be used to deepen the trust, which in some ways might be a bit of a contrarian take, by allowing the advisor to do more of the thing that they're meant to be doing and less of the thing that can be automated. And we're not the only ones, right? Like automating an advisor's compliance work frees up time for them to invest in the human relationships. And I think that's a pattern we'll see with AI in multiple industries, is it will empower the humans to do more of the things that make us humans.
So do you think that AI is an enabler for trust in finance industry?
In the wealth management space specifically, I believe so. For context, 53% of investors would leave their advisors if they weren't made to feel special. And where I see AI coming in, at least in our side of the world, is helping the advisor show up for them, helping the advisor remember, their kid's birthday or their kid's college plan, and really deepen the trust in a way that previously was impossible. Really, I see AI scaling the human touch.
You said 33%.
53%.
53%, okay. So, Christian, your comment about AI impact?
I think as I think about this, I think if we look at I think companies that have been successful in sort of fintech and finance over the last, call it kind of decade and a half, have sort of fallen into two broad categories. One have been people trying to build large bank-like institutions, and the others have been ones that have been very focused on sort of like vertically solving one very specific kind of problem in finance. Like you see it with robo-advisors solving one problem. And I think the thing that sort of AI enables, or is enabling, is kind of, I think like each company being able to be much broader in kind of where they service. I think traditionally finance lended itself towards organizations who could have that kind of strength of balance sheet, who could build depth of operations behind the scenes in order to do more than one thing. And I think that kind of through automation, through kind of better systems of record, through kind of just being able to do more, we will see less of the kind of the success in fintech being these sort of micro kind of vertically specific products, and actually those same organizations with similar amounts of resource being able to go kind of much broader and utilize kind of the strength of distribution that they've built on one thing and actually kind of spread it much broadly. So I think it's enabling kind of much kind of larger surface area of products that are being built, simply because actually you don't need this strength of kind of operating infrastructure that historically kind of banks were very good at. It's like building kind of that breadth of like how do we actually do all of this stuff, whether it's from compliance to security to kind of KYC onboarding to moving money around, all of these things. I think each one of those things becomes much easier in a world of AI being accessible to all these companies.
So, Christian, it's about infrastructure, as you said, and new operations and data. And I would like to go to Danai and ask, many people say, okay, is AI rebuilding finance, or we are just patching all systems?
Yeah, I mean, that's such a good question. What we've seen is financial institutions have huge back office operations, right? So, and there's a good reason for this. Every person's finance is hyper-personalized, most often out of distribution in terms of like workflows. So banks end up having specialist workflows, specialist teams that pass tickets across each other. This creates what we call a handoff tax. Every time you get in touch with your bank, they pass you on from one team to another. There's delays, there's context being lost. And where we see AI making a huge change is not removing specialization. Specialization is needed. You will have KYC experts, you have money laundering experts, lending experts, that's all needed. But there is a change in the unit of work. There's a change from tickets being passed around to having a customer-level case where AI agents are the specialists. They're sharing context, they're sharing memory, and they're passing this information around between them by eliminating the handoff tax. So it is essentially being reinvented from the back office to the front office.
Yeah, and now in Greece, for example, in traditional banks, you can find more AI agents. Or if you visit a bank, they have fewer people and more consulting roles, okay? But when I was speaking with a C-level guy from a Greek bank, a great Greek bank, he told me, okay, I feel that people, they feel we are dinosaurs. So you feel you are the new solution in the fintech industry? Danai?
I've definitely seen this, but there's definitely been a change in Europe, I would say, probably in the last 12 months. I think Europe is now realizing that the wave is here and they need to jump on board, and there's definitely appetite for change. I think what is obvious to even, more legacy trad banks, but fintechs as well, is you can't just throw humans to the problem. There's just not enough humans anymore, right? And especially in adversarial scenarios where scammers can easily use AI to attack, you can't just find as many humans. So I think they're all realizing that this is the solution rather than just having to do AI because everyone talks about it. I think they can see the real value.
Yeah, of course. But Christian, do you think that future finance institution even look like a bank?
I can't predict the future, but I think probably not. I think that I think that sort of all of these financial experiences sort of kind of gravitate towards being more embedded over time. But I still think the role of a financial institution, kind of whether it's a bank or something else, is still incredibly important. Because to your point, I think that kind of a lot of this stuff, whether it's where I get financial advice or the financial products I buy or where I get my mortgage from or any of these things, it's so predicated on trust. And I think that whilst these experiences will become increasingly more embedded and seamless, and I won't necessarily kind of have these point solutions or like whatever it is, I think the role of the institution itself in kind of imbuing that trust in sort of the services and products that they offer, I think is really important. So I don't know that the institution or the bank or kind of whatever is going to look the same as it does today, but I think the very fact that an institution exists and it imbues that trust in the products that it distributes, I think will kind of remain to be true, but those institutions will look very different to they do today, and I think the customers' sort of expectations of the experiences that they get from those institutions, being much more personalized, being sort of having the person at the other end of the phone remember your kid's birthday, sort of all of those things become far more important, the expectations grow substantially.
Yeah. I agree, Christian, and now Greek traditional banks are creating neobanks, and they try to adjust. So, Victoria, you would like to comment something?
Yeah, I could not agree more on everything you just said. I think if I were to predict the future, one thing that we might see change with financial institutions that in the US has been happening for the past 10 or so years is some of the financial advisors that do right now sit in the bigger banks could very well go and spin up their own smaller firms. They might get frustrated with the lack of AI, or they might realize that it has actually never been easier to set up your own business in any industry. So I wouldn't be surprised if we saw this decentralization of moving from the 3 top banks to a bunch of smaller, more AI native, more thoughtfully curated experiences, which is something that in the US is happening very, very aggressively. For context, 13% of advisors every year from the Goldman Sachses of the world are going and setting up their own practice in order to deliver better, more thoughtful, more personalized experiences.
And I think that's one of the things that the US is ahead of Europe on, is sort of the need for the sort of much more personal relationship with the person on the other end of the phone providing the service. Yep. I think kind of in Europe we still have a very kind of institutional mindset of I am a customer of X, and thus sort of like if that person leaves, that doesn't necessarily sort of dictate me leaving and kind of going with them. And I think we've seen that as a trend much more in the US than we have in Europe, where kind of the power of the institution and the power of the brand of the institution still holds a lot of weight.
Yeah, I'm not surprised with anything, because now, for example, we have startups or unicorns with one person with the aid of AI. Okay, it's crazy if you think about it. And I would like to ask both of you, and there is a line between the personalization, the manipulation in the AI era, because when we speak about finance, it's about trust. So, okay, we will start with Danai with this.
Yeah, I mean, in terms of personalization in finance, people generally are more relaxed with letting someone make the decision. Like, that is how the world has worked. You've got fund managers, like, you offload the decision-making to someone else. So I think naturally, humans and customers are going to be quite relaxed with AI being part of that. I guess that maybe the pivot here in the behavior is instead of, do I trust this person to manage my money and kind of give me personalized advice, the pivot is, do I understand what is this AI optimizing for? What are its constraints? And when does it stop? Does it know how to stop? So I guess the personalization, I think, element has always been there. Like, humans have always interacted that way with finance. I guess it's just the mode of operation that is changing slightly, but I think humans are naturally inclined to let someone else, potentially that is less emotional and more informed, to make those decisions.
Okay, and Christian, I have some friends who have studied finance, okay, and they told me, I feel now more comfortable to let AI manage my finance. How do you feel about this?
Well, I think that we're all sort of leaning on these kind of tools and products in order to kind of help us make decisions. Kind of whether it's in finance or in other kind of areas of our lives, whether it's sort of our kind of the doctor in our pocket or the financial advisor in our pocket, like whatever. I think the challenge has always been, with anything kind of like this, it's sort of the distance that exists between knowing what to do and actually doing it. It's sort of like, how do I can make a decision, I can make a financial plan, I can understand what the right kind of product for me might be. But actually, sort of, there's still quite a lot of inertia in then me going and like, okay, now I have to go and transfer all this money and it's all in these different places and I have to sign up in all these different places and do KYC and all of this stuff. And it's sort of just like, that's a really easy sort of can for me to kick down the road. And I think that that's probably like the biggest way in the sort of the shift in the consumer behavior and expectation that comes from AI, which is, I don't know, I hate filling in forms. I especially hate filling in forms or answering questions when I know that the person on the other end of the form already has the information somewhere else. Like, I've given you this information, I've told you my goal, I've given you my passport number and my address 6 times, sort of just go look it up. And I think that like it's these sort of shortcuts kind of across these sprawling different systems that exist inside these financial institutions. Like, it's sort of that glue that I think makes the consumer experience much better. Suddenly, sort of, if you're asking me a question that I know that you know the answer to, or I had a conversation with a colleague of yours and I answered this in some detail, like, I think people's tolerance for that is going to go way, way down really, really quickly. So I think that that's sort of like one of the ways in which AI is sort of imbuing itself in these sort of different institutions. But I think on the specifically, I can use ChatGPT to sort of help me pick an index fund or an asset allocation or manage my money or my budget. I think, yes, absolutely. And I think it's one of the big things that we're betting on. But I think kind of the implementation of that is actually more painful than coming up with the decision.
I don't know, ChatGPT always agree. Okay. So, Victoria, your comment?
I was going to say, robo-advisors, which is really what you're getting at, which is AI-led like management platforms, work well for up to a certain threshold of wealth. And then what you see after that is, no matter how good the AI gets, the other person, when they're trusting, $2, $3, $5 million into a system, they want to know that there's a human on the other end, monitoring, supervising, checking in with them. Like, I think one thing that you said, Christian, that's really important is this idea of an accountability partner. And I think what we'll see in the future is anyone above mass affluent remaining with financial advisors, but financial advisors that are very much tech-enabled in the back end. So advisors that do not ask you to fill out many forms, advisors that already know your birthday, and so on and so forth. But what we've seen is there have been robo-advisors for years, and the reason they haven't been widely adopted isn't because the AI wasn't good enough. The tech for those types of technologies has been there, it has been good. You look at companies like Wealthfront, who just IPO'd in the US and the stock tanked shortly afterwards. And it's just because ultimately, our thesis at least, is that when it comes to your life savings, you want a human on the other end, but a human that is very much powered by AI. And I think the younger generations wouldn't trust any advisor or any financial institution that is not powered by AI.
I like that the approach remains human-centered, okay, but now in the third round of our discussion, I would like also to speak about Europe. As we are in Athens, okay, many analysts say Europe can't compete with USA or China, for example. We have too many regulations, especially on fintech, okay? But I know that Europe has some milestones in the fintech industry. So I would like to ask your opinion about this. How do you feel here in Europe in comparison with USA, for example? Who would like to start?
I can start.
Let's go.
I don't think we can outspend the US on frontier models. I think it's not a controversial opinion, I hope. And then, China has their own infrastructure that is quite hard to compete with. The one thing that we do have, I guess, what is our unfair advantage is regulation. And I'm not going to argue that regulation is positive. It can be, but it can also create latency, which can kill companies. But what Europe's unfair advantage can be, if we can figure out how we can turn regulation into something that accelerates startups, so in a way where if we figure out trusted deployment in legacy institutions, which we know that's where the high AI value deployments are. They've got huge problems like energy, public services, finance, regtech, all of those domains. If we can figure out how trusted deployment works in those regulated industries, it means that we can have a lot of AI unicorns suddenly being born in Europe, but they don't need to go to the US to grow aggressively. They can be growing aggressively in Europe, and then we become the gold standard. Europe is how you do a trusted deployment in a regulated industry, and then you get instantly a global recognition across all continents because we set the standard of how that is meant to work.
Okay, Christian, your view?
I think that it has been a long-held belief that, for example, like London is one of the sort of fintech capitals of the world. And I think it's partially because we have a regulator who is willing to sort of create corridors for companies that have sort of fewer regulations, sandboxes and things like this that enable them to build regulated services sort of within a closed environment that doesn't necessarily have the full weight of, it's why kind of like look at kind of how many new banks have been created around the world, like neobanks, and how many of those are sort of in London and sort of have been sort of started in London and kind of like we pioneered the sort of the ability to have the regulatory framework in order to create a new bank. So I think that sort of I'm not a fan of regulation in the same way that I imagine a lot of people aren't. I think it kind of serves a purpose in certain areas. But I think this idea that, especially in fintech, kind of that we in Europe are not good at this, I think is wrong. I think that we are, and I think that we've created sort of this environment that has been extremely positive for that. And I think we're starting to do a similar thing with AI. And who knows how this is going to play out, but I think that we have this benefit in Europe as well, I think of sort of this forcing function that we've always had to think very internationally immediately. Kind of our own individual single sort of countries are not large enough to sustain building huge businesses. So you immediately have to start thinking kind of cross-border and through localization and kind of different priorities and different things matter to different people in different countries. So I think that's a huge advantage. I think kind of you build a much more robust product and organization if you have to account for those things from day one, rather than I think if you're in the US, like there is such a massive sort of homogenous domestic market for you to sell to, that it's very easy to kind of kick the can down the road of how do I localize and internationally expand until much, much later. So I think that's a huge plus for us as well, is sort of thinking about these things much earlier and sort of structurally building what could be more robust institutions because of it.
Speaking about the advantage of thinking globally, Victoria, many Greek entrepreneurs now, from the first day, they start thinking about the markets outside of Greece.
Totally, and I think that's spot on. When you're building in the US, you kind of forget a little bit about the rest of the world, and the way maybe that's not necessarily the right way to think about it, but my biggest reluctance or hesitation towards building in Europe, probably as a function of the business we're in, would be in large around the data. So I think Europe regulates data incredibly strictly, and to some extent that's a good thing because it prevents manipulation. It prevents the case where one party is using the data to, harm the other party. But it also inadvertently prevents personalization, which could be a really good thing, right? So in the case of Finny, for instance, there's a difference between an advisor using our platform to say, hey, you work at SpaceX. I know you must have questions around the upcoming IPO, your compensation, the tax implications of that. I can help you. Here's a guide I wrote exactly designed to help people in your shoes. That's a very different message than trying to use the exact same data to steer like anxiety or use someone's anxiety to benefit. And I think what would be even more powerful if Europe could set the standard for the rest of the world would be not so much to constrain the data and regulate the data, but to somehow regulate the intent. Look at the objective function and say whose interests who's benefiting from this? Whose interest is the system optimizing for? Because I think in a lot of cases, it's actually the consumer. And to be fair, I do believe that a lot of times fintech is on the other side, on the wrong side of the line between personalization, manipulation. You see oftentimes, credit cards optimizing for payments and fees and brokerage accounts, which is obviously wrong. So I think intent would be the better thing to regulate.
Okay, this is a great insight. Because I'm a Fortune guy, I would like to close the discussion with your companies and where do you focus now? Are you obsessed with something? Okay, let's start with you, Victoria.
Yes, we're obsessed with this idea, well, many things, but one thing
Mainly.
that comes to mind is we're obsessed with this idea of leveraging the fact that we're a startup, we're lean, we started in a post-AI world, we're only 35 people, and we don't want headcount to increase pretty substantially. Every time before making a hire, we think 3 times, and we say, could an agent do this instead? If someone from a function asks for headcount, we always force them to try to build that role internally. Mm-hmm. And only if that fails do we then hire. And I think that's really important because that's how you avoid bloat. That's how you steer, you keep the company tight and you steer the ship in the right direction. And by the way, what's even more exciting is that you could do that with your vendors as well. Every horizontal tool that we considered buying, performance software for reviews, or dashboard software, we ended up building internally, and I think that's really powerful.
Great, Christian.
I would probably give a similar answer. I think that the thing that we're obsessed with is moving quickly. I think in a environment where sort of, I don't know, people and organizations are just more capable than they were sort of 5 years ago. Like having intelligent generalists sort of like gets you pretty far like these days. So I genuinely think organizing an organization around sort of speed being a competitive advantage, especially in kind of high trust regulated sort of environments. I think like we all know the kind of the cliche like banks move really slowly sort of and things like this. And I think building an organization in a post-AI sort of native world where at the fundamental core of that organization is this sort of principle of like we move really, really quickly, but in a way that sort of kind of protects the customer, it sort of adheres to regulation, sort of all of these things as well. You're cognizant of the fact that you're dealing with people's life savings and sort of all of these things. But you architect every other part of the organization to be able to move really quickly, I think is the thing that sort of we at Clove are obsessed with.
Okay, thank you. And Danai?
Yeah. In a slightly different vein, I think our obsession largely goes towards taking human judgment and distilling it into programmable code. So I believe humans have excellent judgment in really hard tasks like financial crime, but they also have a lot of biases. I can definitely see the world where we're able to distill human knowledge, experience, and learning into AI models that eliminate the human kind of indecision or human differences across different agents, and you have AI agents that are able to be essentially your best KYC human. And then you have humans managing their AI minions that essentially are mirror images of their experience and learnings.
So guys, thank you very much. One last quote from me, because here are many startups or scale-ups. I like the founders to speak about the vision, the market, and the people, because AI is the tool, not the solution. And please stop always speaking about valuation and raising money. This is not only the point, that's my point, okay? Thank you very much, and all in the audience, okay? Thank you very much.